People can be really smart and still miss the point on buying gold. But to balance this whole thing out, I can be really dumb and still set the record straight. So you'll hear financial advisors recommend keeping 5 to 10% of your net worth in gold. You'll also hear financial advisors say that you shouldn't have any at all, and unless it's your financial advisor that you're getting the advice from, it probably isn't a financial advisor at all. It's probably a media personality hanging out in the personal finance space. People like Dave Ramsey or Suze Orman, maybe even somebody like Jim Cramer. Now, I'm not a financial advisor. I'm not a media personality in the personal finance space, but I can point out a few reasons to hold gold and a few reasons that their opinions aren't always relevant to begin with. And maybe I should just start out saying that I don't really feel that the habit of saving some gold over time is really one that needs defending, but I will explain a little bit of the idea anyway. The point that I'll eventually make here is that gold has multiple benefits, but the typical advice to stack gold or not to usually only considers one of them. And that's its performance as an investment, something that I don't put very high on the list of reasons that I buy. Now, for 10 years, I put aside a minimum of $500 a month for gold, and I was not really concerned about its performance because it was never meant as an investment. It was meant as savings, and it was meant as a backup, which I suppose seems redundant, but I thought of it as a backup to my savings. And I might have had a different take if it was losing value that whole time, but that wasn't the case. My average cost today is still well below the current spot price of gold. So if you hear a smart person say that gold is a terrible investment, well, it really shouldn't be a big deal. It's a little bit like saying a Lamborghini is a terrible off-road vehicle. It's true. Now, really, the case that I'm making personally is that I don't let buying gold prevent me from investing in things like growth stocks or real estate, which is what it's being compared to. It was never an either-or situation for me. I don't think it should be for you either. And when you hear the Dave Ramseys or the Suze Ormans saying that you should not buy gold or silver, well, they aren't telling you to not buy gold as a way to save. They're telling you not to buy gold as an investment, or at least that's the angle they're considering it from. Now, if you drop down a level to the armchair personal finance experts, there tend to be louder opponents, and you don't have to look far before you'll find comments from people saying things like, imagine where you'd be if you would have bought Bitcoin instead. That tends to be the popular asset that commenters will throw out. And yeah, if I could take every unneeded dollar and drop it into Bitcoin between 2009 and its all-time high in 2021, well, that would have been pretty great. If somebody from the future would have just told me when to get my money into Bitcoin and then when to get it back out, that would have worked out really well. So unfortunately, though, it just doesn't work like that. The people who are telling you when to get in and when to get out, well, they're not from the future, and mostly they've all been wrong. So people have gotten lucky in that market, and I even did okay, but an asset that only performs some of the time is definitely not one that I'd want to rely on heavily for any ongoing strategy. Now, most people dollar cost average into something like Bitcoin, so it would have been really easy to burn away those early profits by continuing to buy in well above its current value. Most people did that. But you still see those self-assured comments from people suggesting that Bitcoin is the better investment. And maybe it is. Because again, I just don't see gold as an investment. I see it as a way to save, and to turn that around, I would definitely not want to use Bitcoin as a way to save. And as for not buying gold in that same time frame, those 10 years that I've been buying, there really isn't any logic there. I could have not saved cash. I could have skipped out on insurance policies, I guess. And that's what the magic of hindsight will do for you. I know that I didn't make a claim on my homeowner's insurance in that 10 years. I didn't make a claim on my general liability or my vehicle insurance in that time frame. And nobody needed to collect on my life insurance. So the idea of buying Bitcoin instead of gold always makes me shake my head. Maybe I should have bought it instead of paying those insurance premiums. Anyone making a comment like that is really overlooking the fact that you don't buy insurance after you need it, you buy it in case you need it. So moving back up the pyramid to the Dave Ramseys and the Suze Ormans of the world, whether you like them or not, I think there are certain things coming from personal finance experts that make a lot of sense. Things like limiting your debt or creating a budget so that you're living within your means, maybe building momentum with investments through baby steps. That is all good advice, and it applies well to most people. So there's a reason that that advice and those personalities are popular. It's that they target the obvious things that help the vast majority, and even the advice to not buy gold might even apply well to most of those people listening into those kinds of shows, or at least following those programs at that stage in their lives, because buying gold won't really help you get out of debt. Buying gold doesn't really create passive income, and gold will rarely outperform growth stocks, even crypto. Present year excluded, of course, but the argument that you shouldn't buy gold because it's a non-yielding asset, well, it misses the point that it's a savings model that doubles as insurance. And this whole thing, this feels like one of those things that shouldn't need to be said, but there are a lot of people who suddenly sound really bearish, and that brings me to the next point, and that's simply that this kind of debate tends to creep in when gold is not at peak performance. If you look back at 2020, it was kind of the opposite. I felt like armchair commenters, well, they were being really bullish. They were being far too bullish on gold. They were predicting $10,000 an ounce. They were predicting wild moonshots for silver. But today, they're being too bearish on it. I see YouTube videos talking about the price of metals plunging when they're down 2%. And that's such a short-sighted view on metals. It always makes me think that the person making the video isn't looking at metals the way that I do. In one way or another, they are looking at the potential profit rather than looking at gold as a tier 1 asset. And as such, it is at risk of dropping in value, the same as the stock market, crypto, real estate, or your childhood rookie cards. But you shouldn't take the performance inside such a tight window of time and extrapolate it. Anyone buying gold in 2021 in order to sell in 2022, well, they were probably thinking of gold as an investment the same as Dave Ramsey was. It's just that while they were telling you it was about to shoot the moon, Dave was telling you it wouldn't do you any good. Okay, so I'm going to make one more point here. To dovetail on the idea of gold as a savings that doubles as insurance in case something bad comes up, is the idea that it also doubles as capital in the event an opportunity comes up. Now, I mentioned before that the only time that I've sold gold in the past was to take advantage of an unexpected opportunity in real estate. I'm no real estate mogul, but I play in the space enough to suggest that it's a far better investment than any other asset class. That's my opinion, at least. And I don't mean simple investments in REITs or other obfuscated group investments. I mean actually owning income properties, because you have the appreciation of the property and you have the income generation that it brings. So if you have a property on a 15-year mortgage that's cash flow positive or even neutral, you have tenants paying down the mortgage while the property itself is appreciating. So in other words, you're making an investment without actually having to come up with the capital. Now, you need a down payment, of course, but it's really just setting some capital aside until you turn around and sell that property. And I didn't really mean to make this about real estate, and don't get me wrong, real estate can be an absolute pain. You don't have to try very hard to find terror stories about single-family rentals. There's risk involved, and there's exposure to unexpected expenses and lawsuits and other bad things, but as far as return on investment goes, real estate is at the top of the pile, especially in categories other than single-family rentals. Now, the problem for most people, beyond that potential for the bad things that I just mentioned, is the down payment. And coming up with 20% for that perfect property is not easy. And metals have helped me there in the past. Maybe it'll happen again. I don't know. But even though you can come out on the losing side of your acquisition cost by selling metals at the wrong time, having it available to parlay into a bigger asset like this is a huge potential benefit of having those metals. So if you stack gold as a hobby or as a more interesting savings account, that asset doubles up as insurance against bad things happening, and it triples up as capital for opportunities that might come up as well. So the argument that gold is a non-yielding asset does not make much sense to me. I've never bought it hoping it would cash flow itself. I've never bought it hoping it would 10x in a year. I buy it like a grown-up, I guess, and that's going to keep me from waffling if Dave Ramsey talks it down, or if somebody making videos about gold and silver is having a bad day. Now, I've seen it work for too long to say that it's ever been a bad investment, too long to say it's been a poor use of capital, and I don't think that I've approached it from any bias really on one side or the other. It's worked out well in the past, and I expect it to continue working out going forward. And if I don't end up using what I've accumulated, which I currently don't have any plans to do, I'll be more than happy to pass it on to my kids. I think that does it. There's not a whole lot else to say, so let's call it good there. Let us know what you think. Good use of capital, bad use of capital? I don't even think it's a debate, but leave a comment. Let us know what you think. And then while you're in the comments, be sure to hit the like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.